Good morning, everybody. All right, let's get started. Okay, US last night rose for the second day running as the technology sector outperformed. There you can see technology up 1.1% on average, followed by basic materials and financials. Merck, Sprint and Coach all rallied on better than expected earnings, and tech stocks from Yahoo to Google headed higher. I saw Twitter came out after hours. They didn't like the earnings, and I think they've dropped below that initial open on after the IPO. So we'll see what happens tonight, whether that sort of leads the tech shares at all. There was slightly softer economic data that came out. Consumer confidence fell to 82.3 versus 83.3 expected. US home prices remained relatively unchanged in February, but year-over-year growth slowed down markedly. And we've got a chart here showing how home ownership rates in the US have just continued to decline from their peak in sort of 2005 to 2007. And maybe that is an indicator that mortgage rates are unlikely to increase markedly in the near future until we see those start to rise. In Asia, we had the only real market that had any kind of a move was Hang Seng. It was down 1.5%. We had out of Japan, we had Kyocera Corp, which rallied after earnings. Aluminium Corporation of China and Willys Limited both fell on disappointing earnings. Out of Japan as well, Bank of Japan kept stimulus unchanged, which was expected, and industrial output came in slightly softer than expected, but the Nikkei up regardless. This chart just shows how stocks that have had stock splits have outperformed the S&P over time. It's quite a big outperformance, and that should bode well for Apple. It's just an indication that Apple stock split should be favorable to its share price in the long run. Okay, so corporate action today, we had BNP Paribas come out of France earlier, which is a beat. Daimler out of Germany came out, which was a slight beat. We had BTI sales update at 8, which I think was a miss if I saw on Bloomberg correctly. Time Warner coming out before the US Open, Philips coming out at 2 o'clock, and MetLife after the US Open, after the close, sorry. I'm not going to go through all the key factors today. If I've just be selective, the money supply out of SA came out at 8. I'm not 100% sure what it was. We'll have to have a look at that. We had private sector credit as well, came out at 8. We've got German unemployment rate coming out just before 10, European CPI at 11, mortgage apps out of the States at 1. At 2 o'clock we've got SA trade balance in rands, and 2:15 out of the US we've got ADP employment change. We've got GDP, Chicago Purchasing Managing Index at 3:45, and at 8 o'clock we've got the FOMC rate decision. All right, let's have a look at a few charts. The first one I'm going to show is Naspers. Naspers, obviously, it's been quite a wild ride. We've got Tencent, which has dropped 3.4% at last glance. So we're going to see, we're most likely going to see Naspers drop from this 1,035 support level to go and retest probably psychologically important level at around 1,000 rand. And then main support, which comes in sort of between 980 and about 955. So anywhere in between that range, there's a bit of support, apart from the psychologically important 1,000 rand level. I'm going to ignore the fact that it looks like it's building up a bit of a head and shoulders here. I don't want to get overly bearish on the stock, but definitely going to get a lower open this morning out of Naspers. If we have a look at Discovery spent a few days sort of consolidating around this breakout that it had just under $90. couldn't really seem to get going, but the last 2 days it's had put in some two pretty solid days. We got a target here of around 92 and a half in Discovery, but often, after a stock's had a big move like it has, the consolidation often just marks the 50% move of the entire move. So we could see a test if we zoom out of the previous high at around 100 rand, if the market supports it. Now the next few I'm not all that confident on, purely because hold on, let me check. This is the wrong one. Okay, so we've got right, we've got SPAR here, which I'm showing around the 126 level would be the breakout level. It has lagged the other food retailers, but if we can get a bit of strength above 126, it looks like it's forming a bit of an inverse head and shoulders, and could pop around to the upside. We've also had a nice rounded bottom here, so it looks like it's consolidating before another move to the upside to sort of catch up with those other food retailers like Pick and Pay and Woolies. And the last one that I want to show today is Truworths. Truworths, a very similar pattern, nice rounded bottom, actually putting in a bit of an inverse head and shoulders here, and which broke above the 80 level. The target of the entire move would be approximately, well into the 90s, the mid 90s, sort of 95, 96. So possibly some more upside to go in Truworths. And that's all for today, guys. Good luck trading.